Trading gaps methods 1. Trading gaps methods 1. The purpose of this video is to show traders a gap trading method that works. Alright, there are different type of gaps and there are different type of gap trading methods. Gap trading method 1 or trading gaps method 1 is a gap trading method for trading exhaustion gaps or speculative gap. Let me say this again. Trading gaps method 1 is a trading method for trading speculative or exhaustion gaps. Very, very important. All right. Recently, I have recorded a video that I call Practical Preparation for Gap Trading Like a Pro. All right. In that video, I show traders how they can prepare themselves for gap trading like a pro. So for the purpose of this video, talking about trading gaps method 1, I will not, expand the subject of the preparation for gap trading like a pro, but I will just show traders, the trading gaps method 1, which is a valid gap trading method for speculative and exhaustion gap. Very, very important. So the next question trader will ask, when and where do we have speculative gap and exhaustion gap? That's a very good question. Then I will refer traders back to www.dayprotraders.com. I will say to traders to click on trading gaps methods. All right. And I also recommend to traders to subscribe to www.youtube.com/user/Dayprotraders. So you subscribe to Dayprotraders channel, watch the videos, so you can search for video gap trading videos by Dayprotraders YouTube channel. And you may watch many of our videos where I explain to traders when and where a speculative or exhaustion gap will occur. All right, very, very important. You want to know. Talking about gap trading gaps method 1, we will highlight, the width of the gap. So the stock that I'm looking at here is AMAT stock, Epic Alpha Mike Alpha Tango on a daily chart. This stock is listed on the NASDAQ 100. It's American stock. And you can see on this, on the daily chart, the stock gap up from this level here. I'm going to color it now. It gap up from here. This is about the preparation for gap trading. You see here, it gap up from here to here. So if you pay attention to, I'm going to move this line. You see this candle here, you can see that it's a bearish candle. So the candle did open at the top and close here. But it went down all the way here before pushing it up and close here. So you want to know where you can place, where did the gap has ended. It has ended at the opening price of this daily candle. All right, you want to highlight clearly the width of the gap. So don't place if you get it wrong, you will get other information wrong. So this candle here, open here and close here, and then it gap up to the opening price of this candle here. All right, very, very important. So the gap has ended here. That's it. Now, so this is the width of the gap. So the width of the gap that's it. That's the width of the gap. All right. Now, next step, we will now apply Fibonacci extension to the gap. So because it gap up, we draw it from the top to the beginning of the gap. If it gap down, we'll do the opposite. Right? We need to move on, my friend. So we apply Fibonacci extension to the gap, the width of the gap. All right? And we highlight the 138.2% Fibonacci extension level. That's the orange line there. That's the orange horizontal line. That's the 138.2%. So we are here that day. The stock gap up from here to here. We will draw where the gap has started from, where the gap has ended. We have that line on our chart. Okay? We just do that. Okay? The next step, we apply Fibonacci extension level, and we highlight the 138.2% Fibonacci extension level. You will understand that on that day, the price did not reach that level. But a few days later, many days, in fact, you see many days, we on a daily chart, many days later, the price slowly but gradually went back to retest the 138.2% Fibonacci extension level. Boom, on that day. So let's place a vertical line there. According to trading gap method 1, if this is a true speculative gap or exhaustion gap, we will expect the price to find a resistance here at 138.2% Fibonacci retracement level. Now, some trader will go and sell straight away. It's up to them. This is about their trading method, their trading style, but we don't recommend that to traders. We will use what we call a multiple time frame trading method to trade it. In reality, this is a trading setup. So the orange line is our warning line. We don't assume that the price will definitely come down. But if it's a speculative gap, if it's an exhaustion gap, there is a high chance that the price will find a resistance at 138.2% Fibonacci extension level. But because we are on a higher time frame, we'll use a top-down trading method. Price can go above the orange line and find support and continue to go up. If that's the case, don't fight it. Be ready to buy and be ready to sell for speculative and exhaustion gap. This is a bearish trading setup here. We apply top-down trading method and then we sell it. If we sell here, we receive a valid sell signal after applying a top-down trading method. So this is our trading setup on a daily chart. We can go to the hourly chart for the signal and then use 10-minute time frame for the entry. Like professional traders, applying a multiple time frame trading method, very important to manage the risk that is involved in any trading setup. But the most important thing is the trading setup. Here we have a price that has gap up and then went up to the 138.2% Fibonacci extension level. According to trading gaps method 1, if this is a speculative gap or an exhaustion gap, there's a high chance, high probability bearish trade setup will appear at this point in time. Now, as a professional trader, we will use the top-down trading method to trade it, selling it at this near on or near the orange line and take it down. And here it is, you see, price went down. This is about trading gaps method 1, which is a gap trading method for trading speculative and what? Exhaustion gap. If you want to know more about the characteristic of a speculative gap, characteristic of exhaustion gap, subscribe to Dayprotraders YouTube channel or search for gap trading videos by Dayprotraders YouTube channels. And you'll hear me talking to you and explaining to you all these things. It makes sense? It's also powerful. What I would suggest to traders, watch the video that we call Practical Preparation for Gap Trading. How do we prepare for gap trading? Do your preparation. I can explain it very fast. We highlight the beginning of the gap, we highlight the ending of the gap, and we highlight the 50% Fibonacci retracement of the gap. Here, if you look carefully here, the 50% Fibonacci of the gap, if I put it there, you will see clearly these are key levels that we are watching. So for our preparation, we will have the, you see, this is the 50%. So what the stock did, it gap up from the green line to the red line and then pull back to the 50% Fibonacci retracement level. So if you know how to prepare practical preparation for gap trading, here it is, it pulled back here. This is a key level. So we'll watch this level. All right? Then it went up, start going up. So you see, 50% and then what? The 138.2% level. So talking about preparation for gap trading like a pro, we draw all this line before the price start moving to this level. So the gap up from here to here, we have the 50%, we have the 138.2. So boom, you see, it comes to the 50%. Next level, now it crossed, it went to 138.2% level. Is he an exhaustion gap? Is he a speculative gap? Well, find out. And from there, you will know that there's a high chance that you may change direction here. And then here it is, going down, going down, going down. All right, it makes sense. This is a trading gaps method 1. Now, in this case, the stock gap up. What do we do when it gaps down? All right. So if it gap down, we will do the opposite. So suppose, my friend, the stock gap down, okay? From the green line here, I'm drawing now. I'm drawing a diagram on my chart. So it gap down like this. So from this line, down like this, okay? Once again, for the preparation, practical preparation for gap trading like a pro, we highlight the 50% of the gap, and we will also highlight the 138.2% Fibonacci extension of the gap. If this is a speculative gap or an exhaustion gap, there's a high chance that as the price goes back down near the 138.2% Fibonacci extension level, there is a high chance, not certainty, not 100%. There's nothing like 100% in the stock market. Market sentiment, economy news can change the dynamics of the market. So if you start applying this method for the first time and it didn't work, hey, don't dump it. All right, my friend? Practice, practice, practice will make you better. All right? Especially if you are a new trader. If it goes back near the 138.2% level, there's a high chance that it may change direction near the 138.2% level if it's a speculative gap or an exhaustion gap. This is the end of this video about trading gaps method 1. I invite you now to follow me in the next video when I will be talking about trading gaps method 2. You want to know, you want to understand it clearly. If you like the video, please give us the thumbs up. If you dislike it, we want to know, give us the thumbs down. All right. If you love it, feel free to share in Google+, on Twitter, and also on Facebook. If you love our videos, all right, hit the subscribe button so you can also watch more tutorials like this if you want to understand gap trading. I recommend to traders to search for a video, gap trading videos by Dayprotraders YouTube channel. Check out the webpage at www.dayprotraders.com. Click on gap trading, click on trading gaps methods, and also there is another page, okay, trading gaps Q&A. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about trading gaps method 1. Speak to you soon.